All right, so at the top of the show, the FOMC minutes were released. That was the meeting that, of course, that ignited the stock and bond market rally, and where Powell essentially took a victory lap. Now, the problem is, during that Q&A session, it felt like maybe not everyone was aboard. And, of course, we are reminded that this is a very dangerous gambit on Powell's part. In fact, this morning, Richmond Fed President Barkin said there could be a soft landing, but also warned there could also be further tightening. Let's bring in QI Research CEO and Chief Strategist Danielle DiMartino Booth. All right, Danielle, I'm just going to real quick read you. This is Don Luskin. His firm, they put out a piece. So much for the lie that the rate cuts were not discussed at the December FOMC. Yeah, the minutes are unambiguous that the lower projections for Fed fund targets showing cuts in 3 coming years are explained by participants as being based on improvements in their inflation outlooks and subject to an unusually elevated degree of uncertainty. So, I mean, Powell, I think we talked about that here. You were here when he was asked about that they don't talk about it. Everyone sort of throws in their ideas. Is that even a good idea? Because for a long time, I thought it was like any other meeting. People got together and hashed out thoughts among themselves.
And that's the way it's supposed to be. And so these minutes clearly communicated that there was a back and forth and that there were differing opinions. I don't see, I think the word lie is a little strong, but I certainly see where they're coming from because the Fed speakers.
But why is it important that? Why would it be important
hard.
whether he lied or not? Why is it so critical that why did Powell have to say, hey, we didn't discuss this? What's so important about that?
I think that he feels that financial conditions, and they mention those in these meeting minutes, have eased too much, and that they're taking back a lot of the work that tighter financial conditions had done for the Fed.
Right.
And that's what we see when stocks are close to all-time highs.
When the bond yields were at 5%, that was doing the work of the Fed, right? We saw demand for loans go. It didn't matter if you couldn't get a loan. No one wanted a loan.
Exactly.
Right? So, but that's come down a lot since then. We're under 4.
But we really haven't seen any easing up in lending standards.
Not yet.
We've seen the stock market take off, but we really haven't seen banks just throwing open the coffers.
I got to ask you about this. A few suggest that the committee could face a trade-off between their dual mandates. They're the only central bank in the world with a dual mandate. What does this mean, though? Will they favor one over the other, inflation versus jobs, or vice versa?
So it was pretty obvious during the transitory phase of policymaking that they were favoring the unemployment mandate, maximizing employment over their inflation mandate. After transitory went away, then Powell kept saying it's really important to get down to that 2% target, and we're going to do everything we can because that's going to help the labor market. Now it looks like they're going to try and find a balance and go back to saying, hey, monetary policy works with a lag. It's clearly softening the labor market. There were other comments in the minutes to that effect. So I think they're trying now to go back to being a little bit more balanced in their approach.
Well, less than a minute to go, then. You've gone through it. What's the aha moment? What's the one thing that we need to know?
The aha moment is that they started talking about when they're going to be discussing preemptively stopping with the quantitative tightening. That first words. First words we've seen since June of 2022 about stopping the shrinkage of the Fed's balance sheet. Big news for the markets.
You don't know. There's no specific number, though, right? There's no specific.
We don't know what that. We don't know what ample reserves look like until all of a sudden the overnight funding market seize up. And then sometimes it might be a little bit too late.
Could it be, though, that they've gone too far too fast? I mean, they've admitted to cutting. We got 5 seconds to answer that.
No, so far so good, because we still have a cushion in the system. We haven't seen any aha moments like we saw when they had to launch not QE way back when.
Danielle, thank you very much. Liz Clayman, over to you.
5 seconds, Charles.
She's a pro. I can't do that with 99% of the guests, but I can do it with Danielle.
I can't say my name in 5 seconds. Happy New Year. Welcome back, Charles.
Thank you.